Welcome back here with Money, 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 and this is the year-end tax planning special. So we've been solving some viewer queries, and as promised, let's now talk about the non-salaried class as well, gentlemen. Of course, people who are self-employed, who are working on contract. What are the legitimate deductions they can keep in mind? Of course, there's they can claim a lot of deductions as showing it as business expenditure, but some of the major heads that one should remember.
So major expenditure for small businessmen is, they have salaried employees, their actual salary, generally what we have seen being paid in cash, but never recorded. I think these are all legitimate deductible expenditure one should claim. Also, conveyance and other related expenses such as, freights, transportation costs, or meeting with their suppliers, vendors. All these costs are eligible for deductions and one should claim that. Also, there are a couple of more deductions one can think of. Is that if you are a self-employed person and you are staying in a rented apartment, you can claim deductions up to 2,000 rupees per month for rental expenses which is being incurred by a person. Also, we can talk about, that if you are earning any saving interest, then you can get a deductions up to 10,000 for such interest. Sometime or many a times we have seen that, when you have income from other sources where you have made investment in some securities, but that investment has been made out of borrowed fund. So whatever interest you pay thereon can also be claimed as a deduction from such interest income which you have earned on account of investment made. Okay. So one can claim those deductions as well while filing the return.
Harsh, you had a point in mind, you were mentioning something.
So, well, if you're staying with your parents, it's very well within the system that you actually can even pay them rent and claim that as a deduction in your income.
Okay.
So it's not really out of the system. You're not doing anything which is not right. You can pay rent to your parents and claim that as a deduction for your housing rent.
So then, gentlemen, final thoughts and final tips perhaps for our viewers. The key things that one should keep in mind as you're scrambling to get your tax house in order. Harsh, I'll start with you.
Well, Surabhi, if you look at investments and tax planning, ideally they're two different things. We tend to mix both of them. Let's look at a scenario at the beginning of the year. You have a reasonable sense of the income that you will generate for the coming year. Now, if you know your income, or at least have a sense of the total income that you're going to earn, you know there are certain provisions under the tax laws which help you save tax. Why would you wait till the last day to save and invest for saving tax? I don't understand this logic. Now, the second element you should keep in mind very clearly is that never invest only to save tax. Now, assuming that you want to take only the tax benefits and you've for that purpose taken a housing loan, and you've otherwise investing into a house was not on your list of to do things. Now you started investing only to save tax.
Yeah.
Going further, say possibly 3 years down the line, if the section 24, which gives you deduction for interest paid on housing loan, is completely taken off, then what do you do? The third element you need to keep in mind: your financial planning is your ultimate objective of saving and investing money. So if there is some goal that you have for the future, you invest for that, and every category of investment has a tax saving element to it.
So on that note, Mayur, final thoughts with you. What are the biggest tax mistakes that you've seen people make?
What you should eye on is that what are the expenditure which are available for deductions which you can legitimately claim. We should just think about it. Plan your affairs in a manner that you record and keep all those handily available with you. The other aspect is that you should look at the kind of income which you have. Like there are long-term capital gains arising on sale of properties, immovable properties. Are we investing in a right way so as to gain benefit from taxation? So while we are doing a transaction, before the transaction is done, we can think about how we can make it more tax effective. Tax planning doing legitimately, I don't think is a challenge so far as there is a commercial reason for doing such a transaction.
We're going to take a very quick break on that note, but when we come back, we'll get specific to your queries and your questions all about tax saving and tax planning in this episode of Money, Money, Money.